Mirae Asset Large Cap Fund. What kind of return potential this fund has got? What kind of risk quotient this fund has got? Let us analyze and evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial decisions so that you can reach your financial goals faster and smarter. Before we get into Mirae Asset Large Cap Fund analysis framework, I want to discuss few points on this large cap category. Mirae Asset Large Cap Fund falls under the large cap fund category. Large cap fund means what? What is this category is all about? This category, by SEBI's mandate, should invest 80% of their assets in large cap stocks. Means in the top 100 companies by market capitalization, they should invest 80%. Balance 20% can be invested in mid cap and small cap also if needed, or if it's okay for the fund manager, he can deploy even that 20% in large cap also. This fund is suitable for investors who have high risk appetite because it is a complete equity oriented fund. And this fund is suitable for long-term investor who has a time horizon of 5 to 7 years. 7 years plus is much better. This fund's investment objective is to generate long-term capital appreciation. In the short run, as it is an equity fund, this can deliver negative return. So long-term capital appreciation is the main investment objective of this particular category. What is going to be the framework based on which we are going to analyze this particular fund? We are going to analyze this fund in 3 different segments. First, we will understand the basic attributes, key attributes of this fund. Then we will analyze the return of this fund from different perspective. We are going to do it. We are going to compare it with benchmark, compare it with the respective category, rolling return, best quarters and worst quarters. And also we are going to compare it with peers, competitors. We should not over focus only on return. We should also give enough attention to risk, because risk management is under our control. Return management is not under our control. So Risko Meter, key ratios, and one important special analysis on risk is bad volatility. Only downside volatility we are going to measure. Right? This is going to be the 3 segments based on which we are going to arrive at final observations on what you should do as an investor before investing in this fund. Let us move into the first segment, attributes of the fund. We will look at some of the key attributes. The minimum investment is 5,000 rupees and the minimum SIP amount is just 1,000 rupees. This fund is there from 2008. Nifty 100 is the benchmark index. 31,292 is the overall assets under management. It is an open-ended equity fund which has the expense ratio of just 1.59%. Gaurav Kandalwell and Gaurav Mishra are the fund managers of this fund. This fund has the portfolio turnover ratio of 21%, whereas the category average portfolio turnover ratio is 159%. Compared to the category average portfolio turnover ratio, this fund's portfolio turnover ratio is lower. That means this fund comparatively not doing much of short-term investing, not doing much of momentum investing. This fund is predominantly focusing on long-term investment strategy and buy and hold strategy. Long-term investing and buy and hold are good for investors. It is a fundamentally strong strategy. Number of stocks held in this portfolio is 64. A large cap fund, the large cap basket itself is 100, but this fund owns 64 stocks. The category average is just 49 stocks. That means this fund is over diversified compared to the category. Over diversification can reduce risk, also can reduce return. we have to check whether it is reducing risk or reducing return. When we are doing the return analysis, we will look at it. This fund invests close to 65% of its assets in large cap, 11% in mid cap, close to 4% in small cap. So this fund not only invests in large cap, invests also a smaller portion in mid cap and small cap. Top 10 holdings are HDFC Bank, ICICI Bank, where the exposure is more than 9%, Infosys 8%. This fund also has Reliance Industries, Axis Bank, SBI, Hindustan Unilever, Bharti Airtel, TCS, HCL among top 10 holdings. This fund can invest across any sector, also invest across any themes. When we look at the portfolio, the choice of the stocks, choice of the companies chosen by the fund manager gives one major indicator. They give priority to strong pricing power and sectoral leadership. These top 10 holdings amounts to 52%. We have seen in the previous slide, this particular fund owns 64 stocks. Out of that, these 10 stocks account for 52%. Balance 48% is invested in rest of the 54 stocks. So again, here there is a portfolio concentration here. If you look at the sectoral allocation, top 3 sectors are financial, technology, and energy. Top 3 sectors amounts to 51 sectors, 51%. Rest of the sectors are spread across with 49% of the assets under management. This sectoral concentration and top 10 holding concentration can add more risk to the portfolio, also can add more return to the portfolio. What is it adding? We have to see when we are analyzing the return and risk portions. Exit load of this fund is 1% if you are withdrawing before 1 year. Taxation. If you are withdrawing before 1 year, it is accounted as short-term capital gain. Whatever the gain is there, you have to pay 15% tax. If you are withdrawing after 1 year, there is no exit load. If you are withdrawing after 1 year, it will be accounted as long-term capital gain. Long-term capital gain is taxed at 10%. There is an exemption up to 1 lakh. Now we have looked at all the basic key attributes. Now we are better equipped to analyze the returns. Return on investment, definitely an important parameter. But if we look at return on investment in isolation, it will not give us any clue. That is why we are going to analyze returns with different other parameters also. First, let us analyze returns of Mirae Asset Large Cap Fund with Nifty 100 TRI, Total Return Index. This fund has delivered 2.17%. Benchmark has delivered 2.17% in the last 1 year, whereas this fund has delivered minus 0.66% return. 3-year category, this fund has delivered only 11%, whereas index 12%. 5-year category, this fund has delivered 10.7, index has delivered 11.4. Whereas in 10-year category, the fund has outperformed the index. Index has delivered 13.44, whereas Mirae Asset Large Cap Fund has delivered 15.94%, 2.5% outperformance in 10-year category. Definitely a good outperformance, especially in the large cap. That means this fund in 7 years and 10 years time frame, during that particular period, this fund has delivered reasonably good return. But recent times, the last 5 years, there is an underperformance compared to the index. You pay expense ratio and go into an actively managed fund because you want to beat the index, but this fund has disappointed us in the last 5 years. What is the rank within the category compared to the other funds in the category where this fund is ranked? This fund is ranked as 80th fund. That means there are 79 funds which has outperformed this particular fund in the last 1 year. In the last 3 years, this is 58th position. Last 5 years, 43rd position. However, in the last 7 years, it is number 2, second rank. Last 10 years, this fund has scored number 1 rank. So again, 7 years and 1 year, this fund has shown good performance, but last 5 years, there are other competing funds which are doing very well. Either this fund's performance could have come down or the performance of competition has gone up. Rolling return is an important analysis. This will give you the idea what kind of probable return this fund can generate in different time frame. If 1 year is the investment time horizon, in a best case scenario, this fund has delivered 158% return. In a worst case scenario, this fund has delivered 31% return, minus 31%. In a 3-year category, in a best case scenario, the fund has delivered 43%. In a worst case scenario, minus 4%. In a 5-year category, 5-year return, best case scenario, this fund has delivered 31% return. In a worst case scenario, this fund has delivered 1.17% return. That means if you have invested for any 5-year period, you have not reaped negative return from this fund. If someone could have invested for 10 years, in a best case scenario, they would have got 24%. In a worst case scenario, they would have got 9.22%. So for 10-year category, an investor can expect minimum of 9.22% kind of return, provided if you are investing for 10 years and above. This is the return probability. Hope this gives you an idea what kind of return to expect from this fund in a worst case scenario or in a best case scenario. Now, this fund in the best quarter, what kind of return does it deliver? In a worst quarter, what kind of return this fund has delivered? This fund in quarter 2 of 2020 has delivered 23% positive return. Quarter 1 of 2020, this fund has delivered 28% negative return. So in a quarter, you should be ready to gain 23%, you should be ready to lose 28%. So you should withstand this volatility. To withstand this volatility, you should have patience. To have patience and stay the course for entire 7-year period, you should have strong conviction on this fund and this large cap category. If you could have invested 1 lakh in this fund 7 years back, the present value may be 2,17,000. If you could have invested 10,000 rupees every month as monthly SIP, this fund would have given you 12,88,000. In both in lump sum investment as well as in SIP, this fund has delivered above average return in the long run. In the return analysis, this is the last analysis we are doing, peer comparison analysis, how this fund is doing vis-a-vis its competitors. In the last 1 year, this fund has delivered 0.66% negative return, whereas ICICI Blue Chip has delivered 4% positive return. Last 3 years, this fund has delivered 11% return. UTI Master Share has delivered 12%. Last 5 years, this fund has delivered 10.76, whereas ICICI and Axis have outperformed this fund. Expense ratio of this fund is comparatively lesser. It is a positive observation, 1.59%. Assets under management is definitely 31,000 crore is a sizable assets under management. One of the funds which has got a highest AUM in large cap category. One negative observation which you can understand from this particular table is there are other funds which has performed better than this fund. This is what we have observed also when we did the category comparison. Okay, we have analyzed the returns from the 360-degree perspective. Now is the time to dive into risk analysis. Friends, remember, return management is not under our control. Risk management is under our control. One should not over focus on return and go out of focus in the area of risk. Paying enough attention to risk is also equally important. So we are going to analyze risk also from multiple perspective, multiple ratios, and unique downside volatility measurement tools we are going to use and measure. As per SEBI's Risko Meter, this fund falls under very high risk category. This is suitable for very aggressive investors who are willing to accept very high risk to minimize potential, to maximize potential returns over the long term. Key ratios, standard deviation of this fund is 21.33%. That means this fund is highly volatile. Sharpe ratio of this fund is 0.43%. That means slightly better risk adjusted return. Sartino ratio of this fund is 0.49. That means this fund has got low downside protection. Beta of this fund is 0.97. That means the risk of this fund is equivalent to the market, the index. Alpha minus 0.69. You pay expense ratio and invest in an actively managed fund, expecting that the fund manager will generate additional return than the index. But here the fund manager is generating negative alpha. That means he is delivering lesser return than their respective benchmark. So there is an underperformance here. This is an important negative observation from the risk perspective. Generally, when we measure risk or when we measure volatility, the traditional volatility measurement tools are beta and standard deviation. They measure volatility as a one whole number, right? But volatility has got good volatility. Volatility also has got bad volatility, right? So if you are traveling in a train, what is the probability that train reaching your destination on time or advanced time or delayed time? Delayed time is an irritation. Advanced time or on time is not an irritation. But if you are considering advanced time also as volatility, as a risk, then it is not fair. It is not an accurate risk measurement. That is why we are using special unique tools to measure only downside volatility. We have taken only the downside volatility on the monthly return when the NAVs are falling, how this fund is falling. If the NAV is going up by 10% and the fund is going up by 15%, we are not worried. Extra 5% volatility is acceptable because it is giving me return. But when market falls down by 10%, this fund is falling down to the extent of 15%. Additional 5% fall is bad volatility. We should be worried only about this bad volatility. Based on this particular downside volatility, when we sort all the funds, right? The worst funds are in the top quarter, best funds are in the bottom quarter. In between, there is upper middle quartile and lower middle quartile. So if a fund is falling within lower middle quartile and bottom quartile, then it has got low bad volatility, which is good. If they are in upper middle quartile and top quartile, then it has got a high bad volatility, which is not good. This fund in 3-year category falls into upper middle quartile. However, in 5-year and 10-year category, this falls into bottom quartile. So again, in the return analysis also, we have looked at this fund has delivered good returns during 7-year and 10-year period. But in the last 3-year, 1-year category, they have not delivered good returns. Similar trend is also reflecting here. Risk is properly managed in 10-year, 7-year time frame in the bottom quartile. Because of that, they were able to deliver good returns. In the recent times, 3 years, the risk management seems to be not up to the mark. Because of that, return seems to be not up to the mark. Another important unique risk measurement tool is capture ratio. What is capture ratio? Because this is something unique and it may be new to you, that's why I'm explaining you. Capture ratio is, even the market is going up by 10%, how much of the upside this particular fund is capturing? Are they capturing 100% of the upside or more than 100%? When the market is going downside, are they reducing the capturing? They have to capture less. Or if they capturing exactly what is given by index, or if they are falling more than the index. So how much of the upside or downside this particular fund is capturing? So upside they should capture more than 100, downside they should capture less than 100. But this fund is something unique. This fund captures almost the same. It captures 107% upside, 107% negative in 1 year. 3 year also 98 upside, 99 downside. 5 year 97 upside, 97 downside. So upside and downside, there is not much of difference. And again, if you look at the ratio, 1 year, 3 year, 5 year, the total capture ratio is close to 1%. That way, they are delivering almost equivalent to the index kind of return. However, in 10 years, they have delivered 1.13 total ratio. They have delivered, they have captured the upside better with 103, downside with 91. So again, downside risk protection is better in 10-year category. This risk management was not there in last 5 year, 3 year and 1 year. That is an important observation that this fund was a good performer some time back, seems to be not in a good form at this point in time based on this data. So we have analyzed the risk of this fund also completely in a 360-degree perspective with Risko Meter, key ratios, bad volatility, and also with capture ratio. Now, I'm going to give you some important observations based on the analysis. This fund has got a good AUM, 31,000 crores, low expense ratio of 1.59%. This company invests in leading large cap companies. So a long-term goal of wealth creation is possible with this fund. Though this fund has outperformed the index in 7 years and 10 years, but 1 year to 3 years seems to be a struggle. So this is an important negative observation. There are other better performing large cap funds which are performing better than this particular Mirae Asset large cap fund. The current fund manager team is handling the fund only for the past 3 years. They don't have a long-term association with this fund. Again, in the last 3 years to 5 years, fund is also not performing well. We have to take that also into consideration and connect the data here. As an investor, if you want to invest in this fund, you have to do few checks before investing in this fund. This fund is not investing in small cap and mid cap. If small cap and mid cap rally is happening, this fund may underperform. And in a 5 to 7 years time frame, this fund is definitely good in your portfolio. Will be good only if you have 5 to 7 years time frame. Right? If you have shorter time frame, this fund is not all suitable for you. In your financial plan, based on your financial goals and the risk tolerance, you have to check out whether this fund can fit into your plan, fit into your financial roadmap or not. So that way you can consult your financial planner to take a decision on this. The financial planner will also be able to do one more analysis, like what is the existing mutual fund portfolio you have got, what kind of stock underlying portfolio it has got, and what kind of direct stock portfolio you have got. Together, by adding this very large cap fund, whether this fund is adding stocks which are already there in your portfolio or adding new stocks. So is there an overlap or not? That overlap ratio can be analyzed by your financial planner, and based on that, he will be able to say whether to add this in your portfolio or not. Hope you got enough information on Mirae Asset large cap fund. You are better equipped to decide. If you are in doubt, please consult your financial planner or your investment expert. If you have any further questions on this particular fund, feel free to ask that question in the comment section. We will be happy to add that particular answer also in our next video. If you have any questions related to this fund or any other fund or other investment options, you can book a free appointment with our financial planner and discuss with him about achieving your financial goals. To book a free appointment with our certified financial planner, You can click the link below this video in the description box. We regularly organize insightful investment webinars to educate the investors with eminent investment experts. They deliver topics on long-term investing strategies and wealth creation tools for long-term. They will discuss in detail. In-depth sessions will be there. We are organizing it regularly with regular investment experts. If you want to participate in these webinars for free, feel free to leave your name and email ID in another link which I have given for webinar. If you leave your name and email ID, I'll book the seat for the next upcoming webinar and send you an email invite. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye bye.